Welcome back to your favorite realtor. I'll give you guys another video. Today we're gonna run over some basics, another quick, nice, short video for you guys. Quick, basic types of mortgages. Look at that. That is immense. Maybe I need to hold it. Just so you guys can kind of get an idea of what you're looking for. Because I know people say you go get a loan on your house or whatever, and it's not really the correct vocabulary. Kind of want to know at least what you're getting into, because I'm sure with TikTok and stuff you're hearing a whole lot of different things about FHA loans and things you can do to house hack, etc., etc. So we are just going to give you kind of a broad overview so you can get a general understanding of what they're actually talking about. So first, there is basically two markets. There's a primary and there's a secondary mortgage market. The primary is the one that we're of course more familiar with, where you go to your main lenders, banks, commercial banks, etc., things like that are actually going to give you loans based on a number of things. Once you go through your pre-application process, which you can learn how and what you need to go through that in the other videos that I posted, if you want to go ahead and check that out. Anyway, besides that, those guys are going to give you the basics: conventional loans, VA loans, and FHA loans. Now, of course, there's more other things like USDA loans, which are backed. There's a whole secondary mortgage market of federally insured loans, which are going to be like Ginnie Mae, Freddie Mac, Fannie Mae, and those are government programs that basically have insured loans where you wouldn't really take much penalty if you defaulted, and they wouldn't have to really worry about getting paid back. That's going to be more on the FHA side. Now, when you get into FHA, which we'll go ahead and start with because that is obviously the most popular with people, probably always hearing like, I'm just going to go find this house and put 3.5% down, yeah, it can happen. It's totally possible if the deal is there and if the seller is okay with it. A lot of times FHA financing is hard to go through, especially through sellers. They just kind of don't want to deal with them, typically because they're going to get less on the deal than if they would on a regular conventional. Also, the problem with FHA is going to be like their inspection system, which is another thing that is a problem with VA, which we'll get into in just a second. It's a very aggressive system of searching for houses. Like, there's a lot of things that they look for that are going to be necessary before they can even sell you the house. So it's like, do I even want to deal with it? Also, what they don't tell you is, yes, you can get an FHA loan and you can basically get these government insured loans, and I can put 3.5% down and I can house hack, and that's awesome. Yes, it's possible. But the problem is, the less that you put down, realistically, the higher your mortgage is going to be. And on top of that, they don't tell you about the MIP insurance that you're going to have to pay if you put as little as 3.5% down. Regardless, when you have FHA, you're going to have to pay MIP, and there are things that you can do to kind of get out of it, like refinancing out of your loan, which is a possibility. But realistically, not to say it's bad at all, but it's a thing, and that's just what a lot of people have been saying about it recently. Next, we're going to jump into VA loans. VA loans, of course, you heard, are really just for the veterans. It is looked at on a certain kind of thing. They're not looked at on the MLS, they're looked at on the HUD. These are aggressive. They're getting inspections on these houses, like all them windows gotta open. They can't be foggy when you're trying to sell the house. Like, if the door has to get pushed in too hard to close it, not having it. There's a lot of regulations that they're gonna give you as an inspection just to really get the house, because they're looking for that deal and they want it to be perfect because they're getting it for their veteran. You're not going to be putting any money down on the house unless you're looking for a house that is ranged above what the HUD is asking for and what they're willing to give you. Then you'd have to come up with that cash sum and difference, but that's not considered a down payment. That's just considered, paying down on the house. And this is only going to be available to veteran users. You can only use one at a time. It's not a only one time thing. So, for example, you could go buy a house in a state using your VA loan, pay it down for a year, 2 years, refinance it into a conventional loan, into a 15 or a 30 year or whatever time frame that you're looking to do it, and now you technically would have another availability to use your VA loan. Again, that's only going to be for veterans. The inspections are tough and crazy. The house needs to be in good condition. Next is going to be your conventional loan. Your conventional loan is going to be the most popular type of loan. That's where you're here. You got to put 20% down. less than 20%. You can put 10%. There are in cases that I've heard that you can put 3% down on a conventional loan. The only difference is you're going to be paying an insurance for it. You're going to be paying PMI. So kind of like what you heard for the FHA MIP, it's just another acronym switched around. Something you also have to learn when you're in real estate school and whatnot. So on the conventional loans, if you do want to put less down or you don't have 20% and you're still looking for that 30-15 year term that would be at a fixed rate, then you can still do that. It's just going to be you're paying a lot extra in insurance, and you also want to regulate in, you know, other payments, like you'll have your mortgage, your HOA, your utilities and whatnot, and then on top of that it would be your MIP. So that's just something to check into and look out. All three of these loans are going to be given out by your primary market lenders, so your commercial banks, your mortgage loans, your mortgage bankers, etc., etc. There is a difference between your mortgage banker and your mortgage broker, so I would say definitely get educated on that. If you guys need it, I can make a video on that as well. There are other types of mortgages, again, that go for the conventional. Your times are going to be typically a 30, 20, and a 15. A 30, 20, and a 15 year with a fixed rate or whatnot that you'll be paying. There's different types of amortization that you're going to have to learn about, and that is pretty much just how much interest is being paid versus the principal towards the end of the actual loan. There are other types of mortgages and loans, for example, like a reverse mortgage, which is more like a refinance. Typically for older couples, they're allowed to pull money from the equity out of their house, and they can stabilize it as an income, or they can pull it out and use it as a down payment on another house or buy another place, retire, etc., etc. There are things like a balloon mortgage, which is basically a kind of like a balloon. It kind of just fills up in a sense. You'd be paying a fixed amount for a certain number of years, and it would slowly increase until at one point you would pay one lump sum all at once, basically when the balloon pops. Other types would involve like a HELOC, which is just a line of credit that you're pulling out from the equity of your home. Usually these are for like reconstruction, or usually this is when you're doing like a build or an addition to the house, literally a line of credit from your house, and you just pay back. Alright, I hope you guys enjoyed that video. Just something short, sweet, quick, and simple. I'm definitely going to make more parts to this because there's a lot more details in the mix between each and every one of these mortgages. This is just kind of like to skim over and give you an idea of what is out there, because I know you definitely hear about loans and mortgages and you probably have no fucking clue about what any of that means or what you're looking to get at the end of the day. So hopefully this helped clear some things up. If you have any questions, go ahead, leave it down in the comments, leave me a like. Got more videos coming soon. Hope you guys enjoy, and you know, that's about it for today. That's all I got. I'm tired, bro. It's Sunday. Fun day. Top. I will be coming with some more heat soon. For things for like people that are in real estate school. I still have all my notes in my books and a lot of my test prep and things that just really helped me. So if you're in the midst of looking for all that and trying to find information, that'll be coming here soon. Help you pass your real estate test and be a successful realtor after that. Hope you guys enjoyed the video, and I will see you next week.